Successful traders do 3 things without fail. This week, I'll tell you what they are. Plus, we will look at our overall analysis of the markets, the stock markets, the crypto markets, the commodity markets. Plus, I'll look at the day trade of the week on LGVN, and we'll run a market scan in search of opportunity. So what are 3 things that good traders do? Well, I think the most important thing is they manage risk effectively. And by that I mean they limit the size of their losses. Now, a common mistake for new traders is that they do try to limit losses by using stop loss orders. However, they put those stop loss orders far too close to their entry price. And what that does is drops their probability of success. When we talk about managing risk, it's about managing the size of your loss, but also the probability that you will take a loss. And therefore, your stop losses have to be wide enough to make sure that the stock can have a little bit of wiggle room and then still work in your favor. Now, the next thing that we should think about is focusing on the consistency for trades. We want to be able to consistently profit. And that means you don't try to make every penny on every trade. You're trading probability, what will work most often. And a common mistake among young traders is that they worry about the performance on their last trade. They're judging their success one trade at a time. That's not how you should do it. You should really judge your success over a large number of trades, 30, 40, 50 trades, and try to maximize that. And that means having consistent profits and not necessarily the biggest profits on each and every trade. And finally, we work hard when the market is easy and we trade less when the market is quiet. Now, what do I mean by that? Well, the trend is your friend. We've all heard that saying. And it's a lot easier to make money in a hot market, in a sector of the market that is doing well. And when you have those hot markets, you need to work hard. The money will come easily when you are trading with the trend of a hot market or market sector. And when you have a pullback market or a sideways quiet market or sector, it's going to be a lot harder to find good opportunities and stocks that make big moves. And so in that environment, you shouldn't try harder to find the profits. You should just be patient, wait for the good trades to come, and be a little lazy. When the going gets tough in the market, the good traders get lazy. All right, let's move on to our regular market analysis, and starting off with the US markets, S&P 500. So we can see here on the S&P chart that we are still in an upward trend. We had that little pullback and then we made a comeback to hit resistance, and so that pattern right now is called an ascending triangle. And if it can break out from the tip of the triangle, then the market's likely to go higher. What is the probability that it will break out? Quite high, because the momentum is up. So that's a bullish chart. You can see here on the weekly chart also in that upward trend. The issue here is that we're sort of approaching the top of the channel. Got a little bit more room to go till we get there, but that would be something to keep an eye on. All right, looking at the NASDAQ 100, also made a nice comeback from its pullback and is still in a bullish trend. The small cap market has not participated in that rally this week. You can see the small caps have been trending lower, but let's keep in mind that this is a really important break from a long-term pattern. That break we had 2 weeks ago is maybe 3 weeks ago, a very important break, and it points to this market going higher ultimately. Just in the last 2 weeks, we've had a little bit of pullback. It's typical that it would retrace 50% of the gains, so we're at about the point where it should bounce off of support and start to move up again. So we'll keep an eye on that for next week. On to the Canadian markets, and the TSX 60 in an upward trend still. Perhaps a little bit weaker than the US markets, and that's likely due to the concentration of energy stocks that are on the TSX, and of course energy pulled back. We'll look at that with the oil chart in a moment. On the weekly chart, still in a bullish upward trend, but again sort of approaching that upward trend line of resistance. I didn't draw that great, but you get the idea. It's kind of right around in there. So wouldn't surprise me if we get a little pullback in the TSX, but As long as we stay in that upward sloping channel, then we are good. The TSX Venture small caps, a little bit of profit taking last week, but still making a decent recovery from the very boring market that it had through most of 2021. On to currencies. US dollar had a nice break this week. We had that breakout a few weeks ago. Well, a couple right there was the breakout. And we went quiet, and then another break. So US dollar is looking bullish. And Bitcoin rallied into resistance. When markets rally into resistance, they usually get stuck at resistance. This is like a trust unit, not a trust unit, ETF sort of thing. And it's actually a little bit deceptive, because if you actually look at the chart of Bitcoin, it went to new highs and then pulled back. So, and that's just because there's some fees and things like that come with these ETFs. So the point, though, is that this market rallied into resistance, got stuck at resistance. Very normal, very expected. I'm still reasonably bullish on Bitcoin, but I do think short term it's going to go sideways, maybe even pull back a little farther. Ethereum in a nice upward trend. There's the upward trend line. You can see sort of an upward sloping channel, kind of wind its way through it, pulled back to the bottom, should now bounce and move back up toward the top of that channel. And commodities, gold took a little bit of a break after strength 2 weeks ago, a little bit of a breather this week. It is always going to be having a little bit of trouble as it tries to fight with this resistance, with the pessimism that has been in place since really the fall of last year, late summer last year. But it is in recovery mode, and that is good. Oil market pulling back the last few weeks, but in the grand scheme of things, it's still in an upward trend. We're kind of going through a similar phase like we went through here. So I expect probably a little bit more weakness in oil as it comes to the long-term upward trend line, but the long-term outlook is still positive. And finally, the fear chart, relatively low, maybe a little bit of an uptick here. Not a big deal, but could indicate that the market's ready to see a little bit of profit taking, although we really don't see that in the large cap chart. So my ratings then, bullish on both time frames for US and Canadian stocks. Gold bullish long term, neutral short term, as it's sort of stalling after the break of the downward trend line 2 weeks ago. Oil long term bullish, but short term bearish as it pulls back to the long term upward trend line. Stock trading was slower this past week as the small cap index pulled back and the large caps kind of rallied into resistance and got stuck there. Still, the long-term outlook for stocks is quite positive. Oil continues its pullback, but it remains in an upward trend. Gold is stalling, but it's still a turnaround candidate because it did break that downward trend line 2 weeks ago. Fear is low, but starting to rise very slightly. All right, now let's take a look at the day trade of the week, an example of a stock that we traded through the week. And this example comes from Thursday. It was really the hottest stock of the week, and it made our action candle early. Now, you might notice that this is a 1 minute chart. I do sometimes trade off of the 1 minute chart, and more so lately because we're getting these extremely liquid abnormal stocks. This stock traded over 1 million times on Thursday, and that's a huge amount of volume. Was it Thursday or Wednesday? It might have been Wednesday, whatever the 18th was. Anyway, the action candle at the start of the day is your first clue that there's something going on, but because of the price gap, it wasn't one that I was really eager to take. But this little break from a flag pattern here was. And so this was the trade that we highlighted in Active Live on Stockscores, and that had a nice gain. And we'll just go through the economics of that trade. So, entering here for 1,000 shares position, a 1,000 share position, the distance down to support there represented about $700 of risk. It required for 1,000 shares $5,000 of capital, but you can leverage that 3 to 1 because it's a stock over $3. So that means you actually have to put up $1,700 of capital. Now, the exit point came when the stock broke this steep upward trend right in there, and that was a 3.4 times risk trade. So it earned 3.4 times risk, but that represented a $2,380 gain on the trade, which was a 140% return on your capital. Now, there were other trades. Some of our Active Live participants bought it back there. I personally felt like the stock was done. I ended up being really totally wrong, but kind of wrong. the stock ended up going sideways for the rest of the day. But then on Friday, it made a big gap to the upside and continued to be a hot trader. Anyway, that's a little bit of an overview of that day trade from a different angle. This is a strategy I use called a intraday pullback strategy. And on really liquid abnormal stocks, you can run this on the 1-minute chart pattern. All right, now let's take a look at the Stockscores market scan. We'll jump over to Stockscores now. And this week, what I've done is selected the Stockscores Simple US, which is a scan that you can do in the evenings. It looks for stocks that have good stock scores, signal stock score above 80, sentiment score above 60, with a price, and I've set this just after the fact, I'm going to scan on stocks between $1 and $15 to see if there's any small cap stocks that have good potential. So I'll run the scan. It found 11 to look at. And my job then is to look at the chart patterns of these stocks to see if they have breakouts from good patterns. This stock is building an ascending triangle. If it can break out of that pattern, that would be positive. So that's something to watch for on SIFY. This has too much volatility. This stock, decent pattern, but I think when you look at the 3-year, you see that it's really got some strong resistance in this area. So I wouldn't consider that great. USIO, let's blow this one up. And by the way, to blow up a chart, you just have to click on it. It'll make it bigger from the gallery view. There you have what's called a pennant pattern. You see the really abnormal volume, abnormal price movement. That looks very good. Let's then take a look at the 3-year weekly chart to get some context. And there you can see that it's a good pattern for a resumption of the upward trend. You've got that pennant pattern on the weekly. You had some upward momentum late in 2020, early in 2021. It's built this nice consolidation through most of 2020. And then this week, getting strong volume, strong price action. I think that has a good potential to go up for a position trade. The symbol there, USIO. UTI looks good on the daily. I looked at it back when it did this break here, but on that day, it didn't have much volume. The other issue with UTI is that it does have, I believe, some resistance on the 3-year weekly. Yes, you can see that there. Coming into resistance there, and that's maybe going to slow it down a little bit. So if you own UTI, good hold, but I wouldn't consider it a buy here. Now this one, I think it's too late, but it really is a good example of what we're looking for when we run this scan. When you get a breakout like you had back here, the volume was picking up a little bit. Shows up even more on the 3-year weekly chart. If I click on 3-year, make this a weekly chart, you can see that very similar pattern to what UTI is showing now. Little breakout from a pennant, and this one went from $6 to now $9 in 2 months. So that's the kind of thing, the kind of patterns that we're looking for. A good example of one that occurred in the past. I don't see anything else here. EXTR is, I think, too late. Good hold if you own it. And maybe have one more on the next page here. Yep. Not great there. So I think we'll wrap it up there. Well, that has been the Stockscores Market Minutes for November 22nd. Hope that you've enjoyed it. If so, click on the like button, leave a comment, subscribe to the channel, tell your friends, tell your enemies, and most importantly, trade well.